Hello and welcome to our webcast. I'm Amy Pendergrass with Moss Adams, and I'm going to get us started for today's session, Workshop S-10, MAC Audit Update and Future Reporting. We're pleased that you've joined us today, and before we begin, I'm going to play our housekeeping video.
Welcome, and thanks for joining. We're pleased to present our continuing professional education webcast series. Before we begin, please keep the following in mind. You can customize how you view our presentation and interact with the presenter. For better viewing, close all other applications and turn up your speaker volume. You can adjust window size and placement or enter full screen mode using the controls at the top right of the window or dragging the bottom right-hand corner to resize. At the bottom of your screen, you'll see a series of icons that relate to a different aspect of our session. You can download a PDF of today's slides from the Slide Deck and Handouts widget. You can ask questions by typing in the Q&A window and clicking Submit. We'll do our best to answer all questions or follow up via email. If you experience technical difficulty, refresh your browser by hitting the F5 key. Today's session offers 1 CPE credit. To receive credit, you must meet the National Association of State Boards of Accountancy requirements. You must attend at least 50 minutes of the session and respond to at least 75% of polling questions. To participate in the polls, please check the button next to your answer within the slide window and click Submit. We'll track your progress and alert you when you've earned CPE credit. You can then click the certificate icon in the CPE Progress widget and download your CPE certificate. Don't worry if you can't download your CPE certificate today. We'll email you a copy in 2 weeks. If attending this webcast in a group, you must complete our group CPE attendance sheet, available in our Slide Deck and Handouts widget to receive credit. Please have all group members sign it and send only 1 sheet per group. CPE credit can only be awarded to participants registered as themselves and isn't available for participants who view the on-demand version. This presentation is not legal, investment, or accounting advice. We encourage you to seek the counsel of a professional service provider to apply this content to your specific circumstances.
All right, and now I would like to introduce today's presenters from Moss Adams. We have Jonathan Mason, Director, Heather Keser, Senior Manager, and Jesse Vo, Senior Manager. Their bios and contact information are located in your webcast console for your convenience. And now I would like to turn the floor over to Jonathan to get the presentation started.
All right, thanks, Amy. And we appreciate everyone joining us on the call today. Worksheet S-10 audits have been a topic of the conversation for several years now. And we thought it was a great time to just take a step back, look at this last round of 2020 S-10 audits, and spend some time on the subject as the 2021 audits are now in full swing. So just to kind of set the stage, we'll spend just a few minutes discussing the UC calculation and how these audits are conducted by the various MACs. We'll spend most of our webcast on what we consider kind of the top lessons learned from our experience and over 200 plus audits each year we help support. And then we'll dive into an analysis of Worksheet S-10 audits and the results we see in the latest run of HCRIS data. We'll then look forward at how Transmittal 18 may impact future S-10 reviews, as the new cost report templates will now become required at the time of filing. And then finally, we'll wrap up the presentation and go over any next steps and any recommended action items. So let's get started. So to determine the size of the UC payment pool, CMS publishes 2 factors each year. Factor 1 is the DISH estimate after removing the 25% empirically justified DISH amount that is paid out in the standard DISH formula. This chart shows the trend in Factor 1 since the implementation of the Affordable Care Act. So in 2023, the Factor 1 DISH estimate was $10.4 billion. So kind of moving on to Factor 2, this factor is calculating the change in the uninsured rate. So after running it through the formula, comparing the 2013 uninsured rate to the projected 2023 uninsured rate, Factor 2 for federal fiscal year 2023 equaled 65.71%. And so then taking that and getting to the final UC pool calculation, you apply that 65.71% to that $10.4 billion factor one, and to derive an uncompensated care pool of $6.874 billion. And that'll be distributed to approximately 2,400 hospitals. So I thought it would be helpful to just include the UC payment pool trend from 14 through 23. So you can see the size of the UC pool and how big of swings we've seen, over the years. So factor three is how each hospital's slice of the pie is calculated and how that $10.4 billion on the last slide is ultimately distributed. So in 2023, CMS used two S-10s, 2018 and 2019, to calculate factor three. And CMS in the final rule finalized the methodology for future years to use a blend of the three most recently audited fiscal years. So we put on the screen what we believe would be the 2024 and 2025 calculations. We also wanted to add on the slide how CMS determines what federal fiscal year a given cost report would fall into, as we still receive several questions on this each year. So in the example, we've shown the 923 federal fiscal year, and then in the next box, we listed out some of those cost report fiscal years that would correspond to the 2020 year. So all of those, a 10/31/20, a 6/30/21, an 8/30/21 fiscal year end would fall into the 2020 CMS federal fiscal year. So now that you see how the UC pool and how each hospital's payment is calculated, wanted to spend a minute reviewing the 2020 audit process timeline. Some of these things covered on the slide, Heather and Jesse will speak to in more detail. The 2020 S-10 audits began really as early as January of 2022, and many were not wrapped up until really the end of the year. So every audit started with an initial documentation request, and that request included putting the patient detail in the auditor's required template for both obviously charity and bad debt. It usually included a very detailed questionnaire that the auditor requested each facility to fill out in order to better understand how the S-10 was put together. There's also a bad debt reconciliation was a big part of these requests to prove out how the patient detail provided in the logs match what the hospital's financials were showing. So once the MAC received all this information, there was typically a review of the uninsured versus insured write-offs. The auditors also dug into accounts not reconciling from total charges less all activity to the write-off claimed in both obviously charity and bad debt. And so all these checks and questions asked during this part of the review was really an attempt by the auditor, at least in their words, clean up these logs before they begin to pull their samples to hopefully limit any sample findings and ultimately any extrapolations. And so once all the questions were answered, auditors pulled charity and bad debt samples and required documentation proving their patient status, that the write-offs matched the logs, that the write-off was in accordance with the policies. And then after those results and potential extrapolations, the MAC would issue proposed adjustments with typically a kind of a 2-week turnaround time to agree or disagree with those findings. So hopefully that helps lay a foundation for everyone on the call to now have Heather and Jesse dive into what we've learned. But I think before we do that, Amy, I think we have our first polling question.
Yes, thank you. So the first question is, who completes your worksheet S-10 data? And the options are we do it in-house, we have a vendor, or not applicable. And to respond to the poll, you just click the button next to the answer you choose and hit submit. And if you can't see the submit button, you will need to enlarge the slide area.
Thanks, Amy. And I see that we have a current question already coming in. We have the Q&A chat box for you guys to ask questions as we go to the webinar. Somebody's asking about our reconciliation and bad debts to financial statements, why not include that additional request? That's something that we're going to cover today. So it's a great question, and I look forward to telling you about that.
All right, here are the results.
All right, for those of you attending our call today, it sounds like, majority of you are doing your S-10s in-house, and if not, I'm assuming and hopefully your vendor is us. And today we're going to get into the top lessons that we have learned here over these years of the S-10 audits. In our previous webinars related to the S-10 audits, we have covered support of samples, numbers of samples, and consistency in sample sizes and extrapolations applied to years. We also discussed the differences of these items from MAC to MAC or even from auditor to auditor within the same MAC. But through the last few years of these audits, they have always been top items that need attention from the business when it comes to these reviews. Today we've put together some of our top lessons that we've learned through the most recent rounds of finalized S-10 audits. And these lessons are some of the biggest items that can impact the overall S-10 audit reviews and should be in the forefront of providers' minds as the federal 21 audits begin. Now, I will apologize in advance for my use of the words reconciliation or policy, but as you can see here on the slides, I don't think we can stress enough the impacts or the reconciliation of all types of items as well as policy review for the S-10s. So jumping right into the patient detail portion of the S request, we'll get started with the issues related to reconciling each encounter in one quartile line of the request. As we discussed on many of our S-10 webinars, the struggle of reconciling each encounter from total charges to the patient count against the transactions that occur at one point in time still exists. While the majority of the time accounts pay out on the auditor's request templates and provided fields when populated, there are still many reasons that accounts cannot properly reconcile. Now here on this slide, we provided a formula in which auditors use when trying to reconcile the detailed listings provided. I'm not going to go into too much detail as we've covered this in the past, but just one thing to point out here is that your 30 amounts and bad debt write-off amounts should be identified by the year that they were written off. So the charity and bad debt amounts claimed on Worksheet S-10 should reflect only what was written off during the cost reporting period. Sometimes an account has multiple write-off dates, and in addition, they could span multiple cost reporting periods. And per the audit request templates, each patient account recorded should be summarized. It states to roll each account up into one cohesive horizontal line of data. Vertical lines, items such as revenue code, detail, and multiple write-off dates should be reported on supplement listings and relate back to the horizontal summary via the unique encounter number. So now, as if individual reconciliation of patient accounts wasn't enough for reconciling, let's move to the reconciliation of the bigger PIC items. Although these items are not a part of the initial request, every MAC reviews the year-over-year changes from each cost report to the prior to the current. Auditors are also seeking to reconcile the current amounts reported on lines 20 and 26 to the accounts identified on the hospital's trial balances. After the auditors have received the submitted audit request, they start reconciling the current year's data supplied to the prior year's S-10 reported. They also start ensuring the detailed matches of financials reported on the facility's cost reports. They open up the working trial balances that they have been supplied, and they start pinpointing where the charity allowances are. Can they find the bad debt expense accounts, and taking those amounts and comparing those totals to the detailed reports supplied for lines 20 and 26. Now, many of you may already know that comparing these S-10 amounts to the trial balance can be like comparing apples to oranges. The data supported for Worksheet S-10 should be patient-level detail driven, whereas the data reported in a facility's trial balance can include amounts outside patient detail, such as accruals or even reserves. So here in the next few slides, we've provided some examples of these reconciliations, and we'll go into additional detail for reasons related to any potential variances. for this example, this auditor is reviewing the current year's S-10 total for charity and bad debt to the prior year's amounts reported. We have seen questions asked related to as little as a 2 to 5% variance on some of these audits. Now, if we start reviewing line 20, column 1, uninsured charity, the amount for the current year is $32 million higher than the prior year. For insured charity, a decrease of $2.4 million. But for charity in full total, it's an overall increase of $30 million. And bad debt overall is showing a large decrease. So let's discuss the number of reasons that these variances could be related. So system conversions are a large reason for year-over-year variances. Starting with charity, there could be issues when converting to a new system that could cause a decrease in charity for the delay of how long it could take charity applications to process, or even to ensure the new transaction codes are being set up and used correctly. We've also seen it cause increases for some facilities for efficiency purposes, or the way that specific codes spelled out in their policies can be identified. Now, for bad debt, almost all of the time, system conversions cause a decrease due to the length of time as it takes the internal collections process to occur. Some other key factors that are contributors to all things was the pandemic. Hospitals all over the nation have seen large variances due to COVID. Now, obviously, COVID patients are not allowed to be reported as charity and bad debt as facilities were receiving reimbursement on those claims for HRSA. And in addition, overall hospitals just saw less patients coming into their facilities. Now, as we reviewed, supported, and consulted on over 200 plus S-10 audits during the federal 2020 reviews, it was also not uncommon to see some of the year-to-year variance relate to prior year extrapolations or reclasses, potential bad debt cleanups, or even policy changes, which we'll talk about more here later today. Now, the next example here that we have on this slide is of an auditor comparing the patient-level detail reported for line 20, column 3, your total charity, to the current year's working trial balances and the charity on the account. As I mentioned earlier, comparing the trial balances to the patient detail isn't exactly apples to apples. And for this particular provider, their policy allows for uninsured discounts to be included. This facility has uninsured discounts that are not mapped to the charity account reported on working trial balance. The uninsured accounts, like most facilities, are reported in another contractual's account, which cannot always be easily mapped and reconciled from the trial balance. Now, on this slide, you can also see that they are reviewing the year-over-year amounts related to the trial balances as well. As we see these amounts relate to trial balances, the explanations still relate to the year-over-year variances as we discussed on the previous slide. And with that, I'm going to hand it back over to Amy for our next polling question.
All right. Thank you, Heather. So our second polling question is, how many hours did your facility spend on the 2020 S-10 audits from start to finish? And your options are 0 to 5 hours, 5 to 10, 10 to 20, over 20 plus hours, or not applicable, or our vendor handles most of the audit requests. And then also, as a reminder, if you would like to receive CPE credit for today's webcast, you will need to respond to at least 3 of the 4 polling questions. And I also want to address that I know Heather was having some connection issues. She is trying to work on that to get that cleared up for you guys to help with the sound quality. All right, here are the results.
All right, thank you, Amy. Hopefully you guys can hear me better. Just looking at this polling question, I can tell you that we spend a good amount of hours on these S-10 audits, and it looks like the trend is, 10 plus hours, if not more. So moving on, here on this slide, when it comes to items that can be time-consuming, we can see across the nation that the struggle for the hospitals to complete a bad debt reconciliation template. Now, this is an item on the initial data request that can pose a time constraint issue. When starting bad debt, the idea that you should do is what do your financials show? As we've shown here on the slide, there is a template that can be used as a guide, starting with the prior year ending balance of the accounts receivable and reconciling the amount to the current year ending accounts receivable. This would consist of taking an ending balance, adding patient revenue, and netting down payments and adjustments, or any other items to separately identify the gross total written off the active AR to the bad debt expense. From there, Part 2 would consist of taking the gross write-off total, then removing any professional fees, recoveries, adjustments to get to patient detail totals reported on line 26. The amount that gets netted from the gross total bad debt write-offs can certainly depend on the hospital's bad debt practices. Now, we've seen that these issues can begin from hospitals finding the right person to know how to populate the template to ensuring the details supplied also agrees with the first part of the reconciliation. If for any reason these items have variances, it's important that the hospital research these and be able to explain any variances for audit. Here on this slide, we have shown an example of how a hospital can properly prepare a bad debt reconciliation from the financials down to the detail reported in line 26. To really focus on Part 2, you can see that the provider is ensuring that they are including Medicare crossover amounts, in addition to recoveries, and other adjustments that they included to get to their line 26 total. Now, providers should and can add as many line items as needed to ensure that those amounts reported reconcile to the detail for line 26. And there could be a number of items as to what that might be. So let's talk about policies. Moving on to the discussion related to the policy reviews, today we're going to cover a few topics that should be top of mind when discussing your financial assistance policies. As we've been mentioning throughout the webinar, how policy changes can impact the S-10, we're going to take a deeper dive into what some of those audit-related topics are. So starting first with updating your policy, there are a number of questions that come to mind for providers. First, start by asking yourself, are you familiar with your policies? For majority of the MACs, a part of this audit request, there comes an S-10 questionnaire, as Jonathan mentioned, that asks questions related to the financial assistance policy. We've covered the S-10 questions in depth on past webinars, but to be more specific as it relates to policy, auditors are really wanting to be able to pick up a hospital's policy and understand what types of charity is being granted, as well as how to easily identify those based on the transaction codes also supplied in these S-10 audit requests. Has your policies been recently revised or reviewed? If not, is it time for the facility to have a policy review? As we all know, the public health emergency is ending, which is clearly something that we can see coming. Now, what you should be asking yourself is, do you or should you be making any updates to your policy for the end of the PHE? As the S-10 instructions state now, and for future cost reporting periods, the charity reported on line 20 should be covered in the written financial assistance policy. What we expect to see happen here, a large number of patients rolling off Medicaid and then potentially coming uninsured. You need to ask yourself, is your policy equipped to handle that sort of change? We have experienced some providers receiving what is known as a management letter issued by their MAC at the end of their audit. And we've also seen providers receive the same letter 2 or even 3 years in a row. MACs usually are issuing these letters to providers to add or clean up their policy for clarification purposes. A few examples relate to comments such as the policy does not mention the non-cover charges or days exceeding the length of limit. And then my favorite one that they like to point out is the policy does not mention the amounts of deductible and coinsurance claimed as a Medicare bad debt to be excluded. Now, some auditors think that hospitals' financial assistance policies should be written according to the S-10 instructions. However, I think we all know that's not how providers function. Specific the note about the Medicare deductible and coinsurance amount being excluded, I don't think a policy necessarily needs to specify that. Hospitals can certainly report Medicare indigent patients on their Medicare bad debt logs, assuming they are following all the rules and regulations. Therefore, the policy needs no mention to exclude these amounts. I can tell you that during Moss Adams' preparation of these reviews for the S-10s, whether we're preparing it for an as-filed or an audit, our standard practice is to exclude anyone from charity that is also reported on the Medicare bad debt logs, which is ultimately what the auditors are wanting to validate as well. As we all know, we are coming out of a pandemic, and through this last round of audits, it was found that some of the facilities may have established some new procedures that could cause issues related to the charity care policy. Now, for example, we had a facility that had a specific percentage threshold related to the federal poverty percentage that was written in their financial policy to grant presumptive charity. Now, during the pandemic, the facility was short-staffed. It also had a high increase to charity care applications that needed manual review. And so there was a procedure that was turned off that then filtered out the manual review and then was deemed automatic presumptive. Since the written policy stated that those thresholds needed manual review, during the audit it was found that this procedure has changed and therefore their policy was no longer compliant, or their practices were no longer compliant for their policy. Another facility had an issue whereas they had updated their written financial assistance policy to include deceased no estate. For audit purposes, the auditors are going to expect proof of how you updated that no estate claim. When reviewing notes in the hospital's patient accounting system, it was found that not all of these deceased no estate documents are being kept on file or validated correctly. Some of the accounts even had notes or stated using date of death from the newspaper obituary. Let me tell you, that is not going to suffice for support at audit, and therefore the auditors were left to apply an extrapolation on that particular finding. And with that, upcoming is our next polling question. Amy?
All right, thank you, Heather. So our third polling question is, has your facility received a management letter from your MAC subsequent to your S-10 audits? And your options are yes, and we have made appropriate changes to address their concerns. Yes, and we're still working to implement their recommendations and findings. No, we have not received a letter, or NA, or I don't know. And then while you're responding to that, for those of you that would like a copy of today's slides, you can download them from the folder that says slide deck and handouts. And then we're also sending them via email tomorrow, along with a recording of this webcast.
All right, Amy, I see while we're waiting on this polling question, there's a quick question I can answer in here from the chat. It says some of our auditors are extrapolating and others are not. Is extrapolation required? As far as I'm aware, there is no requirement for extrapolation. It's pretty much up to the auditors on how they're handling that. And we have kind of an overview that at the end of this presentation that we'll talk about that as well.
All right, great. Here are the polling questions, or polling results, I should say.
All right, so it looks like not too many people have received a management letter. That's pretty good news. Hopefully you don't have to revise your policies for any errors that need clarification. So after moving through the audit and the providing the detail, answering questions about the supplied detailed, samples are pulled, support is supplied, and then the audit adjustments begin. Here we have listed are some of the biggest issues that we have seen that relate to the audit adjustments. Now, I know audit adjustments can be daunting, but really it's the best and the final part of the audit. That means you're extremely close to the finish line. And I can promise you, auditors are not wanting to make extrapolations or adjustments unless they really have to. Time and time again, the largest audit adjustments we see relate to the documentation that has been supplied for the sampled accounts, understanding where and how particular items can be covered in the policy, and the reclassing of amounts from column 2 insured to column 1 uninsured. So let's dig into each of these into detail. Starting with the items related to support documentation, this could mean a number of items. As we see listed here on the screen are some of the pretty standard items that we requested for charity and bad debt accounts. Depending on the sample size listing selected by an auditor, it can be pretty disorganized when returning back the supporting documentation. Sometimes just the basic support of a UB patient account history can get excluded for no reason other than just one sampled account out of 85 records. Or it could be the file size on how you submitted the documentation. Auditors may have never received it in their inbox if you attached it on a zipped file and sent it via email. Well, the great thing about audit adjustments is that they can be revised. So after auditors have gone through support and made their notes, it allows for hospitals to have that opportunity to supply any missing support or clarify what should have been supplied. Now on this slide here, we have shown some auditors' notes related to an audit that represent the issues of support. You can see insurance payments made, they need a remittance advice, write-off did not occur within the cost reporting period. Specific to this account, after we were able to review what was supplied to the auditor and dig in, the hospital actually did not supply a full patient account history. We were able to go back and get the full support, and then it was able to provide guidance showing the auditor, okay, here's what you need to be reviewing. And 9 out of 10 times after updated support has been supplied, these audit findings are reversed. So as we've discussed previously, these facilities' written financial assistance policies is very crucial when it comes to the S-10 audits. We have seen many audit adjustments occur for the misinterpretation of written policy. Now, for example, starting out when reviewing uninsured discounts, there are a number of auditors that assume charity applications should be supplied for this. However, no facility usually requires an application for an uninsured patient to receive that discount. Most hospitals apply that discount automatically as the patient is deemed as a self-pay when entered the insurance information into their system. We've seen where some hospitals may have a very detailed section related to their presumptive charity that could pick up a large variety of patients, but yet when the auditors are reviewing these accounts, they may not understand how a specific patient qualified for charity. So in this case, you should review the transaction code associated with that patient and then point out to the auditor and show them the direction of where that code is truly covered in your written financial assistance policy. So now to discuss one of the most common adjustments that we see for providers that has a substantial impact to the amounts in the flow of line 20, line 30, the reclass of the charges of column 2, insured charity, to column 1, uninsured. Now on this slide here, we've shown an example of what one small finding related to the insured, where the amount reported to column 2 did not relate to coinsurance deductible, and therefore the auditor applied an extrapolation to $785,000 from insured to uninsured. Now, since column 2 is not subject to the cost of charge ratio, moving these charges from insured to uninsured is a large impact to line 30. And also the overall UC payment, in which we expect this cost report to be used 3 more times in the future UC payments. Another reason there could be a swing from insured to uninsured is we have seen providers granting uninsured discount for insured patients based on their written financial assistance policy. Instead of reporting those as column 1 uninsured per the instructions, providers have reported those charges as insured. We've also seen where providers are reporting Medicaid non-cover charges as insured as they classify Medicaid as an insurance. Medicaid non-cover charges per the S-10 instructions are to be reported in column 1, uninsured. So just to go over the actual 2020 S-10 audits and consistent with the prior year's S-10 audits, the findings of these charity and bad debt samples, no MAC or auditor handled the findings the same. There still seems to be no set guidelines on how to handle any of the sample findings and how to apply any errors to the population. Depending on the errors, some auditors choose to extrapolate across the entire population, and some MACs have even just chose to remove the particular error to count if they don't deem it as a systemic issue. But that could also go back to the sample sizes that they pull. So I hope this gives you guys a great overview of what we've learned through these 2020 audits, and now I will be passing this over to Jesse to give some HICRIS analysis.
Great. Thank you, Heather. So as we mentioned earlier, the 2020 S-10 audits that were just finalized at the end of 2022, they should be used to calculate a hospital's UC payment for the 2024 and 2025 uncompensated care payment calculation. 2024 is going to use 2018 to 2020, which has already been audited, and 2025 should use 2019 through the 2021 audit that's currently being audited. So it's very important that, these audits were wrapped up and you can see the impact at a high level of all the struggles providers have had that Heather mentioned through the audit process. So we think it would be beneficial at this time to give the high-level overview of what these changes Heather talked about during the audit really impacted nationwide for all these providers who receive uncompensated care payments. So starting with the slide, we're going to highlight any trends we see and then take a closer look at what kind of impacts, there's any changes during audit on line 30 for these hospitals. So to give a little bit of background, the analysis we're presenting today from HICRIS is the change in the federal 2020 S-10 cost reports that occurred between a provider's most recently filed cost report versus what was settled at the end of 2022 when the audits were completed. We did it this way so that if a provider amended their cost reports prior to the audit, it would be a fair comparison of their latest filing versus what was settled in audit. The providers that we have in question are the ones that were set to receive UC payments based on the 2023 final rule, as the 2024 proposed rule has yet to come out. So, excuse me. So we know during these audits that all the DISH eligible providers plus sole community hospitals were audited. So you can see on this slide, there were 1,509 providers who had a revised line 30 amount that presumably came from the audit at the end of last year. The number that really jumps out here is that nationwide, providers lost $1.4 billion out of the total entire pool, which is a 6% decrease. And we're looking at 1,509 providers, which is 2/3 of the providers that were eligible for the UC payment. So on the next couple slides, we're going to dive into what Heather brought up earlier, the two big portions of the S-10 audits, which is charity and bad debt, and how the charity and bad debt changed for these providers who had a line 30 change. So starting with line 20, we're going to dig a little bit deeper and see that overall there is almost $1.4 billion in total change for line 20 for these providers. There's 1,388 where there was a change in line 20 and 202 where there are not. We're looking at what affects charity, and the big thing, as Heather said, it's the documentation and things that happen in audit during sampling. Hospitals not having support for their policies, and overall just not reporting insured charity correctly. That's been a pain point for these past several audits. So, in extrapolations, it's not just removing patients. You have the impact of reclassifying from an insured to an uninsured category for charity, which dollar for dollar is affecting it because they're not subject to the cost to charge ratio. So the second part to mention about this is out of all the years that we've gone over these nationwide S-10 audits, this is the first year that overall uninsured has a negative adjustment nationwide. It's not a large percentage, it's just 0.41%, but for the previous years, all of the insured changes and the audit adjustments have at least evened out that it's been a net gain and then the uninsured column for charity. And this is the first year we've seen negatives in both. So that means that the struggles providers are facing during documentation that Heather brought up are really taking an impact on the line 30. The next line we're going to look at is line 22, charity care patient payments. So you can see that there was 187 that had to change. So not really large in the total amount that had to change in population, but if you look at the percentage, you have almost 90% of providers where they have a change in line 22 losing these reported amounts. So we've seen that this is the fourth year where CMS has these updated instructions for line 22. And in the prior years of S-10s, all patient payments for accounts that received any charity used to be what was reported on this line, but that was the old methodology. Under this new methodology, it doesn't appear that providers who are having a change are reporting this correctly. And looking forward, line 22 has more specific instructions that are going to be on Transmittal 18's templates. So it's crucial that providers figure out, hey, we need to report this correctly under the new instructions. Now we move on to the second component of the S-10 audit, non-Medicare and Medicare bad debt. So we can see that there's 1,298 providers where they had a revision for bad debt between their filing and the audit. We noticed that the change was less drastic than prior years, which means maybe there's been an improvement for how providers have reported their bad debt compared to the 2018 and 2019 audits. Overall, it's just a 3% reduction, even though it's $758 million. And the reason we see that there's still errors, and Heather brought this up earlier, is that non-Medicare bad debt and Medicare bad debt can be different at a hospital in their process and procedures with documentation. Sometimes providers are still reporting a provision from their financial documents, and that way there's a disconnect between the detail being reported. And then sometimes there's just not enough documentation or not understanding the process for when a patient goes to collections, and that's when they're reported on S-10 for certain hospitals versus when they're not deemed uncollectible. So, in summary, what do all these numbers really mean in actual UC reimbursement? What's the bottom line when we look at as the country? So, we don't want to get lost in just the changes in the audits. We want to see how is this going to affect how much money a hospital is going to get. So here's our summary of the 1,590 providers. So overall, there were over 1,200 hospitals that saw an overall decrease, while only 300 saw an increase. And you can see that overall, on average, the average reduction was $901,000. You're looking at almost $1 million in average audit adjustments for providers that they're losing out on their line 30. Looking at what that looks like going forward with this 2020 audit, this is going to be used several times going forward by CMS. So this impact of $233,000 is going to be carried forward for multiple years. Overall, there are also some large decreases. The largest line 30 decrease was $112 million, which is equal to a $29 million impact. And then the largest line 30 increase was $24 million, which would be $6.3 million in impact based on the previous pools and impacts. So what this really shows is, even after multiple years and some progress, there's still some wild swings between these averages nationwide. Overall, there were 275 providers who had a line 30 change where they had multi-million-dollar negative adjustment to their line 30. And then this size will pick up. It could have been an amendment that was accepted at audit. because auditors have allowed for amendments and amended cost reports to be provided at the time of audit. With Transmittal 18 coming out, with templates being required for S-10, it'll be interesting to see that going forward, hospitals will be allowed to amend their logs prior to audit if they submitted a certain amount on their cost reports. So with that, we're going to transition over to talking about how Transmittal 18 impacts the future reporting requirements for S-10 and how it relates to the audits. We had a previous webcast about Transmittal 18 and how there are new templates for Medicare DISH, Medicare Bad Debt, which relates to S-10, but specifically there are now templates for S-10 charity and bad debt. So with these new required templates, S-10 now is split into two sheets. We have what is Part 1, which is the current S-10 process, where it's the hospital's entire uncompensated care in the entire complex, and now they're adding a Part 2. And the Part 2 will just be the inpatient and outpatient services billable under the CMS Title 18 number. Excuse me. So the question we have to ask ourselves is, how will this affect providers' uncompensated care moving forward? Why is there a second S-10 worksheet, and how is it going to be used by CMS now that it's excluding other units? It's going to have its own calculated CCR, it's going to have its own charity care costs, and its own total and Medicare bad debt costs. So if CMS uses this Part 2 going forward, how is that going to affect your UC payment? At your facility, has anyone done a comparison of the charity and bad debt, or how the hospital's financial assistance policy accounts for this? How many exempt units are really being included? How many clinics? How many specific sets of charges and write-offs are being included now that may not be part of this Part 2 worksheet that could be used by CMS? A second portion is talking about clarifications on CMS's part for some reporting instructions for S-10. So financial assistance policies are still based on your individual provider or chain, and what's approved and published by the hospital board to best match the unique situation of your hospital. Obviously, adjustments were made during the pandemic, and adjustments get made as procedures and systems change over time. As Heather mentioned earlier, CMS may send out management letters at the end of audits to help hospitals address any gaps in their policies that are found in audit that could lead to potential issues in the future. How a hospital is affected if that management letter is not used to update a financial assistance policy is still yet to be seen. As you can see, there weren't really a lot of providers who were getting management letters, and at this time, we haven't really seen the results of a provider not updating to a management letter, but that doesn't mean it won't happen. Transmittal 18 has also expanded definitions of physicians, clergy, members of religious orders, and just specific details and wrinkles that weren't previously disclosed in S-10 reporting instructions. And then we can talk about line 20 and line 22, which is charity. One of the changes that we've seen in the instructions, as mentioned before, is charity, insured, and uninsured are treated very differently on S-10, and it's not as easy as just having somebody with insurance or no insurance. There's non-contracted payers, uninsured discounts, non-covered charges, Medicaid length and limits charges. But now there's an additional definition added to the reporting requirements from Transmittal 18. So now a provider is able to add in not just patients who are there's no contract, but there's an inferred contract. So patients that we were previously claiming in column 1 can now move to column 2. So how are hospitals identifying this? Because the move from column 1 to column 2 is a great positive because that amount's not affected by the cost to charge ratio. So it's just another wrinkle from Transmittal 18 to be addressed. And then a new line that's been added is line 25.01. So line 25 was previously exhaustive Medicaid charges, and now they're asking for, hey, if you have anything that insured patient's liability that isn't their deductible, co-insurance, and co-payment, you're able to record these here and in line 20, column 2. So how are you tracking this? Are you able to do this? And if you're not able to track this, is there a way to update your system to track these dollars now that you can report them and maximize your uncompensated care? So like I said, we've kind of addressed the templates before in another webcast, but we want to talk about the templates. These required templates are part of what a provider has to do on their cost report from now on. And as mentioned before, MACs across the country all have different templates. Not every single one is exactly the same, just like all the auditors are not exactly the same. And I've highlighted fields that were never specifically addressed on any of the templates that we've seen up to this point nationwide. So now that Transmittal 18 is out, everybody who filed the cost report is going to be held to these templates. So if we take a closer look, one of the big struggles, and it all goes back to the charity, uninsured, and insured, is that for an insured patient on charity that's been written off the charity, they need to claim the deductible, co-insurance, or copay amounts. Well, on top of reconciling accounts from total charges to balance on an individual level, this is another piece of data that can be very difficult for providers to find, as sometimes it's housed in other parts of their billing system because it's not typically part of just payments, adjustments, and charges assigned to an account. So having this being required up front means that a hospital has to have this information, and probably I would recommend having the remit up front be able to report it so you have support to avoid any negative adjustments at audit. And then the second part of the update to the template is you now have a breakout of specific fields that weren't on templates before for these S-10 audits. So now you have these other non-allowable amounts, amounts written off as bad debt, uninsured discount amounts, other charity care charges. As a provider, the question to ask is, okay, do all these fields even apply to you? Do you have an uninsured discount? Do you not have an uninsured discount? And then what's the cutoff? We're talking about reconciling accounts from charges to the charity write-off. As Heather mentioned, sometimes accounts won't tie out because of timing. So at a certain date, there could be variances where you have to address or disclose, and depending on the auditor, they may extrapolate, they may remove, or they may deem something wrong with the accounts. And then moving on similarly to bad debt, like I said, nationwide, there's no standardized template that every single MAC is used. There's slight differences between the MACs in the S-10 audits. Some ask for this charity care amount, some do not. And then this AR write-off date, if we're going to lean into this AR write-off date, could be any date of bad debt activity. So patients could have bad debt written off during the year. There could be reversals. There could be recoveries. How do you have one line for a patient that has multiple transactions? This is something that's kind of ambiguous that CMS has not really addressed. And then talking about insured status or uninsured status for bad debt. So unlike charity, bad debt is not broken into insured or uninsured. But on these audit templates, and for the past couple of years, it's been a field they've asked for. Nobody's done anything at this point as far as reclassifying bad debt, as there are not two columns for it. But now that it's in the template for Transmittal 18, it's yet to be seen that CMS may do something with it. Then similarly to charity, where there's an issue of, okay, where do you report the bad debt amounts for charity? This is the opposite. Do you have to do a fresh run? How much charity do you have to report? Is it going to be the life of the account for a bad debt patient? You know, is there a cutoff date that's acceptable? Is it going to be the fiscal year end? This is yet to be addressed by CMS. And then with that, I think we're on the next polling question, Amy.
All right, thank you. So the last polling question is, what will be your biggest challenge in completing the S-10 template from Transmittal 18? And your options are reconciling every account from total charges to write-off, separated uninsured versus non-covered versus insured accounts, sheer amount of data and properly formatting everything in the required fields, or separating professional fees and acute hospital charges versus non-acute charges, or other. And once you've completed all CPE requirements, you will be able to download a PDF of your certificate from the CPE progress window. All right, we'll give this a few more seconds to make sure everyone gets CPE. And for those of you that it's not showing, if you just hit the F5 key, that'll refresh your console for you and should pull it up. All right, here you go.
All right. Well, I'll jump in here. I can see it's kind of mixed across the board, and we would expect that. Mostly the sheer amount of data that you're just having to parse out and put in the templates is one of the biggest issues we run into for hospitals. So just to kind of wrap up, we've only got a couple more minutes. We just wanted to list out some action items, some kind of next steps. We really believe it's important to debrief with your reimbursement team and or your vendor if you outsource these S-10s regarding the 2020 audits. We understand it can be difficult to make the time to review prior year reviews. But I think in doing so, you can really review your hospital's area of risk in future audits. And as we've talked about before, has your hospital received a management letter? And have you addressed it? Are there still gaps or holes in completing the auditor's required template? Is that something that you can work with your IT to address for future reviews? Did anything come up in the sample findings with either how patients are being written off or issues with supplying the documentation items like Heather went into to review? And so would more testing be helpful to better understand the situation before these next rounds of audits really get going? And as we look to the future when the new cost report filing requirements go into effect, is your hospital ready? Everything we've talked about today requires collaboration with not only just your reimbursement team, but your business office, your finance, policy, IT, decision support to ultimately provide a compliant S-10 that captures all of the uncompensated care your facility provides to their patients. So with that, I want to thank you all for attending our presentation today. Be on the lookout for our next webcast later this month. I think it's on April 26th over Medicare bad debt reporting. We'd also encourage you to utilize some of our resources listed on this slide. And I think actually it looks like we're pretty much right up against our allotted time. I won't have time to really go into any questions that we didn't get to through the chat, but we'll make sure to follow up with each of you individually to answer any and all of those questions. And again, we just appreciate you joining us today. And with that, I'll turn it back over to Amy to close us out.
All right, thank you. And thank you, Jonathan, Heather, and Jesse for a great presentation today. And thank you for submitting your questions. If we didn't have time to answer yours, we will do our best to follow up with you after the webcast. And feel free to reach out to our presenters if you have additional questions. Their contact information is in the slide deck as well as in your console. And then also let us know if you'd like to set up a separate call to discuss this more in depth by dropping a note in the Q&A window. And if you met all CPE requirements, your certificate is available to download now in the CPE progress window. A copy will be emailed within 2 weeks if you have difficulty downloading it now. And finally, here's a link to an online survey for today's presentation. And thank you for joining us. Take care, everyone.